Today is Friday, 11th of October, pre-market open, 7:35 in the morning, looking at UK wheat chart November 2013, and we've got the daily bar chart in front of us as usual, and you can see here quite clearly that we've had our double bottom form that we've been looking at last 2 or 3 weeks. We've had the breakout and we've gone clear this 160 resistance here. We've seen a moving average cross. We closed last night at 162, we had a high of 164. So from this projection of this double bottom here, we've got a £10 a tonne target, as said the last 2 weeks, and our target is here 170. So I see no reason why that can't steadily climb up there during next week, and look for that to complete. Now I've done a bit of work on the longer term. I just hope I've got these in the right direction. Oh, here we go. Sorry, a bit slow. Right. Now this is our November chart, which we've just been looking at, with a couple of interesting gaps that have formed here. I've watched this one for some time. We've got a gap left up here at 198, and this was right back in last year when the high was. And we've got a gap here now formed of 154. So as of last night's close, we've got a £36 a tonne gap to the upside, and we've got an £8 a tonne gap to the lower side. So sometime the theory goes that these, the last few years we've been watching this wheat market, these gaps have all seemed to be filled. So it gives an indication that we have got quite some volatile movement to come, and we've got this this backfill to come here sometime down here at 154. So I sort of see an up move coming to 170, then probably coming back down here, and then we could see a rise of up to £36 a tonne. Now this goes on to bring this forward. This goes on. This is some work I've done on the November new crop chart, and this is putting an Elliott wave on it. Now the only thing at the moment on this this is the May chart. Sorry, I just get this right here. Trying to watch all these things. This is the May chart, and you can see here that we haven't quite broken out this double bottom formation. Put a resistance line at 168, and it's still at 167. Target on this breakout when this happens on the May, this is 2014 chart, would be here at 179. Now I put the two gaps here that we've got on the May chart. We've got one here at 179, which would follow exactly to our projection of this double bottom, and we've got this gap here left here at 199, and that was from December of last year. So you can see here that all things start to sort of line up quite nicely. Now I've done an Elliott wave count. This is a projection going forward. Our up move here would be wave 1, which would take us up to 178. So that hasn't happened yet, and as it hasn't happened until we break out this 168. Then we're likely to see a wave 2, which would be this backfill, which would probably take us to January 15. That's January 14. And that would give us a wave 2, 168, and then say right through to April of next year, we're looking at wave 3 count up here at £200 a tonne, which would follow exactly to our gap fill here at 199. Now this length of wave 3 would be quite strong and active, and that would be £32 a tonne. And if you think back to our previous chart, I was looking at £36 a tonne rise. So this is all sort of looking forward and sort of trying to get a handle on using the Elliott wave. But obviously these three factors haven't happened yet. We need wave 1 to complete. So to start this off, we need this breakout of this 168 level to take us up to 178, and then obviously we've got some kind of pattern in front of us for the next 6 months trading, but indications are that if we do get this move up, then obviously we're looking for this gap fill right up here. Just bring back up the last chart as we normally look at, which is the oilseed rape here, and you can see here that where are we? We've got this sideways pattern that we've been sort of within, since August, high of 130, low of 355. But interesting enough, you can quite clearly see that we've got now a lower high here, So I've drawn these two trend lines in to show we've got an upsloping channel. So indications are things are slightly changing to the bullish side, and we could see a move up to test this 400 level, so breaking through this 390. We're at 377, so I would say possibility of certainly we've got prices are shown us they don't want to go any lower at the present moment, so now we've got to find a high, and I'd put a target here of 400. So just go back, recap. So we've looked at the new crop wheat, the Elliott Way trade. We've shown the two gaps on the May, and this comes back to our current chart. So currently we are, we've got this breakout in place, and we're looking for this 170 move. But say coming back to that May, we haven't got that breakout yet. So be interested to see if the new crop, if the current month keeps going up and it does drag that May up, and then we get that Elliott Wave count in place. And up and update this time next week. Thanks for watching.